100% they will ask you regarding the chattel as such. Understand that treatment of transfer between spouse and between couple in a civil partnership. Okay, in a civil partnership, understand the amount of what is the allowable expenditure with respect to part disposal, not full disposal. Treatment where the asset is damaged, lost or destroyed, implications of receiving insurance. And when we are receiving insurance, whether we are making reinvestments. Compute the chargeable gain when chattel or wasting asset is disposed of. This will be asked in MCQ also. Is it? This will be asked in MCQ also. And as to understand the basic capital gains of tax planning. Well, how we have done last lecture, we will do in the same way, inshallah. Calculation of gains of individuals, calculation of gains or loss on individual disposals. What are those? Transfer between spouse, first one. Anything part disposal, chattels and wasting assets, and assets lost or destroyed or damaged. Okay, now just read this one. Wherever a symbol will be like this, I will ask you to read. Fine.
The basic program calculating.
Pardon?
The basic pro forma for the calculating the gains of the disposal of assets is adopted by the special rules with the following circumstances. Transfer between the spouse or civil partners, part disposals, cattle and wasting assets, lost or destroyed, damaged assets. Okay, so now those rules will be followed.
Yes.
Okay.
It is not difficult, is right? This is not difficult. If you go from the beginning, it is very easy, like how we have come across last lecture. Okay. Now, where an asset is transferred between spouses, wife and husband. In some cases, the UK have the system of civil partners. Okay. No gains or losses arises on the transfer. Any actual proceeds are ignored. The transfer is deemed to dispose of the assets at its acquisition cost. How much you have purchased, that much cost has to be taken into consideration. The deemed proceeds of the transfers are treated as acquisition of the transferee. Means the recipient spouse, means if there is if transfer between husband and wife, definitely there will not be a profit intention or profit motive. Okay, it is only a transfer. Most of the times it will happen. You are transferring assets, buildings, as your land and buildings to your spouse name. Then we have whatever the price we have taken, the same price has to be taken into consideration. However, note that these rules are only applicable while spouses and civil partners are living together. If they are not separated, is that if there is any divorce happen, very simple. If there is any divorce, it is not applicable. It only applicable to where? It only applicable to the living together. David purchased jewelry 15,000. He gave to his wife when it was 200,000. Calculate say David is deemed to have read this one, please.
He purchased from January to August to July 22. He have gave it to his wife and it was worth 50. Okay, 200. Okay, so he gave it to his wife, but was he purchased it for 50?
Yes, if he purchased for 50, take it 50 only. You should not take into consideration the market value, all those things. Okay, it may be what 200,000, but that is immaterial. Okay.
So only we focus the how the purchase cost only.
100%. Fine. On the subsequent disposal of the transfer asset, means you have transferred it, but subsequently it has been disposed of, it has been sold. The deemed acquisition cost will be identified as a base cost. Is it right? Is the original acquisition cost of the first spouse. Okay? Means, okay, fine. You have received it, but subsequently it has been sold. Then what will happen? You should treat the first cost as a base cost. Okay, the first cost. See the thing. Fernandez acquired a holiday cottage 2917 on 1. Transfer to her husband 2016. Lewis sold the cottage. Okay, Lewis sold the cottage. Is it right? Transferred it to her husband Lewis. Later on, Lewis has been sold 42,000. How much is there? Once you are sold, then chargeable gain will come into exist. If there is a transfer, no chargeable gain. Are you clear about this? Is it right? How much they have sold? He has sold this. See, actually, what happened? Louis is there. He is the husband. Okay, simple terms. She is the wife, Fernanda. Okay, they have transferred. He transferred. Okay, she transferred it. Is it right? She transferred it.
Mm-hmm.
What is the cost? Cost is very important. 29,175. When there is a transfer, we will take the cost only.
Nothing.
Okay, when we transfer, we will take the cost. But subsequently, he is selling the product. Okay, he is selling the product for how much? 42,000. Then what will happen?
Yes.
The gain, chargeable gain, will arise.
We imagine that is same person.
Why we imagine? There is no imagination. They will give very clearly. Louis sold.
To understand the idea.
No understanding idea. See, ACCA will not keep you confused. Okay, question will never keep you confused. Question will be very, very clear. That Louis sold, Louis not sold, transferred, not transferred. There is no if and buts. Very clear statement will be there that it has been sold, it has been sold. Khalas. Is it clear?
Yes.
There is no if and buts. See, question will never see F6, very simple. F6, nobody will fail. 100%. If you are covering this much, inshallah, it is almost you are done with minimum 50 marks. It will be in your hands, inshallah. Okay?
Inshallah.
Is that with this? See, I am having my experience, Ekdan. If I will see my students, even I am not seeing your face, I have not seen your face. I can judge by your commitment, by your response. If you have any student have this much response, inshallah, he is through. You see the moment how I will judge. The more you question me, the more you understand. Come back to the point. John acquired warehouse. How much is there? They have acquired his house of 100,000. Okay, dates are important. 1st September 2002. Is it? Now, he gave the warehouse to his wife. When he gave warehouse, 1/5/2016. How much he gave to the warehouse? He gave to the warehouse, same cost. Was it? Is where? When it was what? Why? Okay, where there is a transfer. Okay, you have the worth of 300,000. It doesn't make any difference. Okay, it doesn't make any difference. Now, Tanya sold the warehouse. She has sold it. How much she has sold it? 35,300. Sold. Tanya has no capital disposals in the tax year but has capital losses. How much is the capital losses? Carry forward. Capital losses carry forward. What is the rule? First you have to deduct annual exemption limit, current year losses, then you have to take carry forward losses. Okay, capital losses carry forward. How much is the capital losses carry forward? 11,800. He has taxable, her taxable income is also there. Is it? Taxable income is also there. Taxable income is how much? 45,000. Okay, taxable income is how much? 45,000. What they are asking us? What they are asking? They are only asking capital gain tax payable.
Yes.
Only capital gain tax payable. Now, till here, nothing will happen. Okay, till transfer, nothing will happen. The issue comes when you are starting, it has been sold. Okay, base cost. Is it right? This is going to be called as a base cost. Okay, this is going to be called as a base cost. Disposable, how much? Disposal proceeds. Is it right? How much they have disposed of? They have disposed of 35300. Okay, minus base cost. Okay, base cost. Base cost is how much? 100,000. Is that 100,000? It comes to how much? 250,300. Is that? This is what? This is chargeable gain. Understanding?
Yes.
Is that chargeable? First you have to deduct. First, there is no current year losses. First you have to take annual exemption amount. How much is there? 12,300. Okay. First you have to take 12,300. How much it will come? 250,300 minus 12,300. It comes to how much? 238,002 minus. You have to carry forward losses. Okay, carry forward losses. How much is the carry forward losses? 11,800.
Yes.
Okay, carry forward losses. How much we'll get? Minus 11,800. 226,200. Is it right? 226,200. Is it right? This is what? This is taxable gains. Okay, capital gains taxable. Capital gains taxable. What is the rate? Lower rate or higher rate?
Mrs. 25 is a higher rate.
20%. Is it right? 20%. How much you will get? Payable. Is it right? Payable. How much you will get? 45,240. Are you okay with this?
Yes.
Check. Okay. If we go from like this, any chapter, inshallah, things will be good. If we jump somewhere, it will be. See, I will. When is your exam, my dear?
Exam is 6 March maybe.
I am with you till you need my services. I am not talking about the fees. Okay, when we have discussed, we say only 3 days. No, I am with you till you need my services for revision also. Till you need. You say that doctor, we will do the class. Inshallah, I am here.
Yes. Okay.
Okay, till unit. And I will say that if it is on 6th of March, na? 6th of,
Yes. Around. Yes.
okay, means I will be there as much as possible. Fine. Now, fine. You have the planning opportunity. Married couples and civil partners transfer assets between them at no tax. And the assets are transferred at no gains, no loss. This provides opportunity to minimize the capital gain tax liability. They can transfer assets between them to maximize the use. Each individual annual exempt amount, each individual basic rate amount, and capital losses. They read this one.
Okay. Planning operation. Exhaust. Responsible. Each individual annual exemption, each individual basic treatment. Okay, so they can change that.
Okay. Now, what they have mentioned here, Teresa, who is married to Kerid, have 3 chargeable disposals. 1, 2, and 3. None of the gains are none of the gains were in respect of residential property. The only income for is the trading profit. Trading profit, okay? Keep it in mind. Trading profit means you have to think about what, if there is anything and they have not, we have to take the band rate, okay? Now, while no taxable income, calculate there is a capital gain tax for the year, okay? How much is there? 10,009, 14, this, okay? They have taken the total. Annual exempt amount. Taxable gain is how much? 67,200. Is it clear to you?
Okay.
Next. 67,200 they have calculated. Is that straightforward? 10% basic rate is how much? Now, what they have said, how much is the taxable income? 45,270. Is it right? 45,270. See the things. 45,270. Okay? This is very important. 45,270. How much is the personal allowance? 12,570. Is it right? 32,700. 32,700 minus basic rate is how much? 37,700. It comes to how much? 5,000. 5,000 into basic rate. This is the same thing what we have done in the last chapter.
Yes.
Is it right? Remaining net band is 5. This 5%. The question stated Teresa trading income rather than her taxable income. Therefore, her taxable income must be calculated to determine the remaining basic rate band. Means you have to make sure, okay, whether they are talking about the trading income or taxable income. If it is taxable income, we should not deduct anything further. If it is a trading income, then we have to deduct personal allowance, and subsequently we have to take into consideration if there is anything remaining base rate band. Just check. Is it clear? Once it's understood, then we'll go to the next one.
It's like we doing before, huh?
Yes.
Taxable rates, taxable income. As per the taxable income will be at this.
Same thing.
Complete the basic rate.
18, 19, 20, 21 chapter will be piece of cake for you. Trust me. Because we are doing in sequence
Inshallah.
model.
Inshallah.
Inshallah. Okay?
Inshallah.
Fine. Now what they are saying, see, in the examination they will ask like this. Okay? This will be given for very 3 marks maximum. Is it right? This will be given for 4 marks. Advise, that's what it says. Advise how tax savings could be made by the couple and calculate the revised CGT by a couple, assuming they have taken your advice. Is that they have taken your advice? Now we have to give them suggestions how they can reduce the tax. We have to give the suggestion based on what? We have to give the suggestion based on these things. Individual exemption amount, basic rate, how we can, see, the purpose of studying this subject is we have to explore all the avenues to reduce the tax as such. Okay? Now what they are doing, just keep it in mind. Okay? What they are doing, is that, see the thing. How much is they, as a married couple, can transfer assets between themselves at no gain, no loss. That is no tax. Accordingly, they transfer assets between themselves to ensure that both will use annual exemption amount, okay, and basic rate band. If Teresa transferred asset 3, what is the asset? How much is the asset 3? Asset 3 is 49,000. Okay?
49, yes.
Major gain is there. Is that asset means you have to take the higher gain. If then the gain would be reduced by 12,300 at a what rate? At a basic rate. Okay, at a basic rate means is that if you are taking 49,000, if you transfer it, is it that then definitely you will get the annual exemption amount. You can take that into consideration. We are taking Teresa revised CGT for the payable. How much they have? She has taken only 2 assets. Okay, she has taken only 2 assets. This is the annual exempted amount of 1. Okay, of her 18,200. Fine. Now the things will work. Okay. See the thing. What they have made that 1 minute. Yes. Is that she has transferred it. Okay. She has transferred it. Taxable gain comes from to how much? 18,200. Now, what is the carry taxable gain? Is that it is 18,200. Fine. Only for 2 assets. She has transferred it to her spouse. Okay. Now, how much is asset 3? Asset 3 is 49,900 minus this is carry. Okay. This is belongs to carry. This is belongs to Teresa. They have shared the income. Okay. Now, both are availing annual exempted amount. Okay. Both individually, separately. Now, taxable gain is how much? Taxable gain is 36,700. Okay. Taxable gain is 36,700. See here it all talks about it. Now what happens? when you are having a tax, if it is 37,700, is it at 37,700? It is basic rate.
Yes.
Is it right? It is going to be the basic rate, 37,700. Now it is less than 37,700. They will take the basic rate. Okay, they will take the basic rate. That is what it says. Now, you see the thing. How much is taxable gain here? Taxable gain is how much? 18,200. Okay, 18,200. Now, how you are dividing it? See Teresa's what they have mentioned. Okay, you go to the question. Is it Teresa only income is for trading profit is how much? 45,270. No taxable income. Okay, she has 42, 46, 270. Is that she has 46, 270. Once 46, how much is there? Now, almost if you have taken it into consideration, she is how much having 42, 40, 45, 270. Is that 45, 270? This belongs to whom? This belongs to Terrace. Is that this belongs to whom? Terrace. Fine. Now, when we are doing this, because still there is a balance is there, balance in basic rate band. Okay, balance in basic rate band 500, and whatever the surplus that will be taken into a higher tax bracket. Means if you take into consideration, she is paying only higher rate to extent how much? She is paying higher rate to the extent of only how much? 13,200. Is it right? 36,700. This is the basic rate. Just revise step by step. Is it okay?
So then they segregated.
Huh?
First they take the full free assets.
See, they have put like this. Actually, they have to do like this. It is Teresa, it is Carey. Okay? It is 10,900, 19,600. Here it is how much? Here it is 49,000. How much is that? That is 49,000. It is 49,000. They should have told, they have given like this. It is easy way to understand. Is that 30,500 and how much? 12,300. Here how much they are getting? 12,300. Now if you do like this, you can make a comparison very easy. Is it? You can make a comparison very easy.
49, the 49 is related to
Carry. Yes. Okay. 49 related to carry. 30,500 minus 12,300 means 18,200. Is it right? 49,000 minus 12,300. Is it right? How much is there? 36,700. Okay, 36,700. Teresa is having the income, is it right? Teresa is having the
Yes.
how much is there? She is having the tax trading profit. Is it right?
So,
She is having the
yes,
trading
45,
45,270.
45 to 100.
Is that? See, Teresa is having that trading profit. Okay, Teresa is having the trading profit. How much? 45,270. Personal allowance 270. Is it? Personal allowance of 12,570. You will have this. Then you will deduct the basic rate. Is it? You will deduct the basic rate. Still there is a surplus. Okay. Still there is a balance is there. Means still she is in the basic rate band to the extent of 5,000. Okay. To the extent
Yes.
of 5,000. Then what we will do? What we will do? We will take this one. Is it right?
Five.
We will take this one. We will take 5,000 at the rate of 10%. Okay, and 13,200 at the rate of 20%.
Yes.
Is it right? I thought of telling you like this. Then I said that first you understand if there is any difficulty. Here with what's happening? Here what's happening? You have 36,700. Is it right? Still in the basic rate. Is it? Still this is 49,000 is a chargeable gain. You don't. She doesn't have any taxable trading profits. Okay.
Yes.
Is that still in at 10%?
Certain, yes.
Is it
Yeah,
okay?
okay, we do like this.
This is easy.
Yes, yes.
Once you understand, please tell me.
Yeah, easy.
Okay. Now how much is there? How much is there? This is 500. This is 1320 times 20. It comes to how much? 2640 and 36,700 times 0.2 7340. Total comes to how much? Tax savings. Okay, total comes to how much? Sorry, it is how much? 3670. So 2640 plus 500 plus 3670. It comes to how much? 6810. Okay, it comes to how much? Is it right? Now what happens? See the things. What happens? How much is the tax savings? That's very important. Is it right? Tax 6810. $12,940. Where is that? 12,940. 12,940. 12,940. $12,000 use of query annual exemption. See, they have used query annual exemption amount.
One.
Is it right? They have used the query annual exemption is how much? 2,000. This is 12,300 into 20%. Means if we have transferred the property, they have saved this much tax. And they have also, see, otherwise they will be in a higher tax bracket at the rate of 20%. Now they have shared it. Definitely they instead of having a higher tax bracket, they came in a lower tax bracket at the rate of how much? at the rate of 10%. Means this much is the tax savings they have. Otherwise, if they have not shared their things, the tax would have been increased by how much? 6,130. If they have not used the spouse advantage. Is it clear? Take your time, don't rush, okay? Take your time and make it a point that once you understood, then only we'll go forward. We have a lot of time is there. Is it? Next. Part disposal. Okay? Where there is a part disposal of asset, this is little bit now. This is little bit, I will not say difficult, this is little bit challenging. Okay? When there is a part disposal of asset, we need to identify how much of the original cost of asset relates to the, how much is the original, means you are selling, assume you are selling, you have laptop, you have, take example, you have a laptop and you have a printer. Okay? Now you want to sell off printer. Then you have purchased both your laptop and the printer simultaneously. Now you want to dispose of the printer. That what? The allowable cost of disposal is calculated using the formula. A is the value of part disposed, A divided by A plus B. B is the market value of the remainder. Is the market value of the remainder at the time of disposal. Okay. What is the market? You are selling only A. You have to take A is the, what is the value of that divided by A plus value of A plus market value of the B. The allowable cost is using the formula then used as a basic capital gain tax computation. Any incidental cost we have done, it should be deducted in full. Is there any cost in terms of enhancement? We have done this in the last lecture. Anything enhancement, anything we have incurred, that amount has to be deducted. The whole asset, rather than just part being disposed of, is apportioned as the same way. A is the value of the part disposal, A plus B is part disposal plus market value. Okay, part disposal plus market value. You see the thing, they have mentioned here. See that? Yahya acquired 20 hectares of land. How much they have acquired? 6,000. He disposed of 8 hectares. How much? 8,000. A is how much? A is 8,000. Is that? A is 8,000. The value of remaining is how much? B is how much? B is 15,000. That's all. As simple as that. Okay. Now, how much is the proceeds? Proceeds is that on July 1st, Yahya sold the remainder of the land, 18,000. This is happens when this happens in what is the cost? Cost is how much? Cost is 6,000. Is it? On 1st June, little bit very slow. Okay, 1st June 2022, he has disposed of for 8,000. The remaining value is how much? 15,000. On 1st July, is it right? He has sold the remaining for how much? 18,000. What is the chargeable gains?
You don't consider the numbers. They are acquired for 20 hectares.
Pardon?
And he sold. He acquired 20 hectares of land. And he sold only 8.
Yes.
8,000. So we have to divide, right?
Yeah.
Here is
next 12 hectares is sold on July 1st. Okay. Next 12 12 hectares is sold on July 1st. Okay?
First date, shall proceed to their charitable gain of 8, which was is
See, write the formula. Is it right? Write the formula. Cost times A by A plus B. Are you clear about this? Deemed cost.
okay.
Is it right? Deemed cost.
Because multiplied by 8.
Is it right?
Okay.
Next, okay? Next.
Okay.
Next, what they are said, see, cost is, that is, see, if you do it, that is the deemed cost. You will have the chargeable gain. Now they have sold it how much? Note that the number of hectares owned and sold is irrelevant. How much you own and in calculating cost of land disposed of. Always use A plus B, which uses the value of the assets disposed and written off. Okay? Now, they have, this is okay. Okay, this is one. July 1st, they have sold disposal. How much they have sold? 18,000. What is the deemed cost? Already this is with respect to what? This is the deemed cost of A. Okay? Deemed cost of A. Total, this is the total cost. See, this what is the total cost minus deemed cost of sold asset A. Okay?
So they take it the 8 hectares first, the cost of 8 hectares,
This, yes. This is, yeah, exactly.
and the remaining of
This is
so
this is 8 hectares and this is 12 hectares.
and 6,000 is 20 hectares.
This is 20 hectares.
So the rest, the cost of the rest minus the balance is there. Okay. Only we use that formula for the disposal.
Yes, part disposal.
Part disposal, yes.
See, this question will be there for 3 marks. Understand my point? This type of question will be there for 3 marks. Fine? Now, what it says, slowly do it. Nothing, don't rush, okay? Slowly do it. What they are saying? They are saying that Jacob have how many lands? 10 acres. 1, okay? He has sold 3 acres. Is it right? He sold how much? 3 acres. When they have sold? Disposal. Disposal on January 2023. Okay? Disposal. So how much is the sale proceeds? Sale proceeds is how much?
The cost of 8, so we do
He
that,
sold
that
3
formula.
sale proceeds.
8.
3 hectares. Okay? 3 hectares are how much? 20,000. Are you okay? Fine? Next.
Yes,
Is
actually,
it right? Deemed cost. Is it right?
just
What is the cost? Same formula. It is cost times A plus B. Okay? How much is the cost? 8,000.
10,000.
Okay? How much is the
Okay.
cost? 8,000. And what is the sale value? Sale value is 20,000 divided by 20,000 plus market value is how
Yes.
much? 60,000.
2,000.
How much? It comes to how much?
2,000.
2,000.
Uh,
Okay? Now, In May 2012, Jacob spent 3,000 leveling the 3 hectares. Is that this is what? This is the
Balance.
for 3 hectares. Is that they have mentioned minus, is that leveling cost. How much they have mentioned 3,000. Okay, 3,000. Anything else? No.
He sold then the rest of hectares, 7.
Remaining hectares is sold
Take
after
the
that.
cost.
Okay.
Yes.
This is the how much it is happening. 20. It comes to how much? 15,000. This is for how many hectares? This is for 3 hectares.
Yes.
Okay, this is for 3 hectares. Now, what he has said, he has sold the remaining also. Is it right? He has sold the remaining. The second one. Is it? He has sold the remaining. Is it? How many remaining? 7 hectares.
7.
Okay, he has sold the remaining 7 hectares. When he sold it on March 2023. Is it right? He sold it on March 2023. What is the sale proceeds? Sale proceeds are how much? Sale proceeds are 75,000. Minus cost is how much? You tell me now. Total cost is how much?
Cost is minus that 2,000,
Yeah.
80,000 minus 2,000.
Yes. How much is the cost? Cost is 6,000.
6,000.
Okay. How much you will get? You will get
69,600.
69,600.
It's not 75. It's 75,600.
75,600. Okay. 75,600. Now how much is the total? 600, 4, 84, 600. Okay. 84, 600. This is total chargeable gains minus annual exempt amount. How much is the annual exempt amount? 12,300.
Yes.
Is it right? 72,300. This is the taxable gains. Is it? This is the taxable gains.
The 3,000 used in 3 hectares, that means is selling cost?
No, leveling cost. Leveling cost. Any cost you have incurred, leveling cost.
Leveling. What does
Mean,
leveling? What do you mean level?
you have bought the land. You have some mountain is there on that. Rocks are there. For what you will do? You will clean up the cost. Is it right? Now I will tell you this. If you have remembered IAS 16, okay? If you have remembered international IAS 16, property, plant and equipment, what happens? They have the cost of purchase. Is it right? You have the cost of purchase 10,000 plus any leveling cost is there. This is the IAS. I am talking about the standard, accounting standard. Any leveling cost you will add up. Then you will say that the cost of land is how much? 12,000. In financial reporting, if you have done, then it is as per the IAS. Now, any leveling cost, we have to deduct that leveling cost. Is it okay?
Okay.
Now, how much is the taxable gains? Taxable gains is how much? Now, okay, this is over. Now, see the things. He has employment income also. He has
yes, for the taxable gain. But now we take the net chargeable gain.
Net chargeable gains. Okay, net chargeable.
15 plus 72,300. We take the net chargeable gain.
No. First we will see how much is the basic rate and how much is the higher rate. Okay?
Okay.
How much is the basic rate and how he is having how much? He is having a employment income. Is it right? He is having a employment income. How much employment income? 30,710 minus personal allowance. How much? 12,570.
570.
Difference is how much? 30,710 minus 12,570. 30,710 minus 12,570.
80,140.
18,140. Okay, this is
Minus
it is
33.
now. Remaining band is how much? Remaining
Remaining band is 19.
37,700 minus 18,140.
19.
37,700.
560.
19 how much? 19,560.
560.
Okay, 19,560. Now you see the thing. 72,300. Okay, 19,560 times how much?
Yeah.
10%. Balance is how much? 72,300
Balance of this
minus 19,560.
72,740.
Is that
52,740.
52,740 is at the rate of 20%. Is it right? How much is there? Plus 1956. 12,504. Okay, 12. This is what? This is capital gains tax liability. What they are asking us, see the things. Now you understand. Slowly you are coming in examination mode. Okay, state the due date for payment.
What? State?
The due date for payment.
Due date. Due date is 31 of July, of January.
Good.
Right?
Yes.
And the same.
Okay. Due date is what? Due date is 31st of January. Which 31st of January 2020. This is the everything is easy. I will never say. Only thing is we should give time to practice. As simple as that. I will never say anything is difficult. Okay, I will never say tomorrow when you are meeting. I will not let you go tomorrow. When you are meeting tomorrow.
Tomorrow, give it 5 to 7.
4:30 to 6.
4:30 to 6. Okay.
Okay. I will check. Tomorrow I am having one meeting, okay? If I will send you a message. If I am not having any meeting tomorrow, then I will let you know and we will meet at 4:30. If I am having meeting, then we will see. When you are going to your play village?
Yes. Yes.
Okay, inshallah. When you will go?
I don't know. I went early, but I am finished from work 4.
Okay, just give me time. Okay, I will give you preference. I will schedule it. If there is anything is there, then I will let you know. Okay.
Okay.
Because till 6:15, 6:30, I am having meeting. Okay.
Okay, Nejo, when you are done, tell me before I will organize my time.
Inshallah khair. Now, coming back to this. Okay, test your understanding 3. What it says, Gamma bought a commercial investment property in 2008 for how much? 50,000. Is it right? 50,000. This is the cost. On July 1st, she disposed of part of the land attached to property for the value of the property, and the remaining land is the 100. They have the legal fees in relation to purchase of investment. You have to deduct that legal fees, okay? You have to deduct that legal fees.
From first one, huh?
Yeah, from first
Okay.
one, okay? Part deduction, it is not full deduction. Okay, part deduction you have to deduct 4,500 part deduction. Same rule, 4,500 into A divided by A plus B. Okay, 4,500 divided by A, multiply by A divided by A plus B. Okay. Now what you are doing, what we are learning in this, that's very important. We are learning that how this 4,500 should be, see that it is nothing but the deemed legal cost. Okay, deemed legal cost. Okay, deemed legal cost. This is only we are learning in
Because
this.
they doesn't say that is related to the disposal of part investment. That's why we use that formula.
Yes. She disposed of part of the land. She disposed of part of the land. Okay? Is it clear to you?
Okay.
She disposed of part of the land. Okay? Very easy. It's not difficult. Okay? How much is the sale proceeds? And she disposed of the remaining land also. Okay? She disposed of remaining land. She disposed of the... Now, what happened? What they are asking us?
That's the capital gain tax payable
Capital gain.
for the tax year 2020. Okay. First, we consider to the disposal.
Okay.
We take the disposal as part of the 40.
Okay.
40, the disposal is 40. Sale proceed.
Okay.
And we use the formula for to get the cost of that of part disposal.
Listen carefully.
We will use
Sabar. See what is the question they are asking? What is the question they are asking? Calculate taxable for the which year?
22, 23.
This has been sold when?
The disposal in July 2014.
Then we will take that one. Which one we will take?
No. We will take the remaining. The value remaining.
We take the remaining. We'll not take the. We'll not take. Understand my point? We'll not take the
Yes.
part. We'll take the remaining. Okay. Disposal.
Okay, and also we want to use that formula to get the cost of the remaining.
Yes, exactly. Is it? Now, sale proceeds are how much? Sale proceeds are how much? Reminder. Is it right? Reminder. Sale proceeds are how much? 200, 600. Is it there? Is it there? 200, 600. Now, we have to calculate.
Yes.
We have to calculate the deemed cost of part disposal. Okay, deemed cost of part disposal. Is it deemed cost of part disposal? How much is the deemed cost? How much they have bought it? 50,000 times. How much they have sold it? 40,000 times 40,000. And what is the remaining part? The remaining part is 100,000.
remaining 140. 140. 140, yes. Total.
Now, how much is their deemed cost? 50,000
Deemed
times
cost.
40,000 divided by 140. It comes to how much? 1428.
14285.
Okay, this is separate. Okay, this is separate.
14.
Now, okay, this
14286, right?
1428. Yeah, sorry, 14286. 14286. Okay. Now, what is the cost of this? Cost of remainder is how much? Cost of remainder is how much? 50,000 minus 14286.
Yes.
Is it right? 50,000 minus 14286. It comes to how much?
It's come to 135.
714.
Okay.
Legal cost also we have to take the same one. Is it right? Legal cost also we have to do in the same way. How much is the legal cost? 4,500 times. Is it right? 4,500
Yes.
times. How much is there?
There is 40.
40 divided by 140. I can put
100.
Is it
Yes,
40 plus, I will not do that, I will put like this. It comes to how much? It comes to 4,500 times 40 divided by 140. It comes to 1285. Okay, 1285. How much is the legal cost? 4,500 minus 1285.
163, 600.
3215. Is it right?
There is remaining 52 income tax. Income tax.
Is it okay?
Yes.
How much is there? 200, 600 minus 35714 minus 3215. It comes to how much? 161671. Is it right? This is called as chargeable gain minus annual exempt amount. How much? 12,300. Is it 12,300? How much is there?
100.
12,300.
300.
149371. Okay, 149371. Now, anything is there? He is having any expenses, anything, any taxable gain, any trading profit, employment income, anything is there?
200, 600 minus 35714.
Why?
No, wait. I'm reviewing. I have in the calculation is different. You are what that you? Oh, okay. Here. I got the difference. This minus this. Okay. No, it's right. Okay. Now we use the higher rate
हाँ
because already the taxable income
हाँ
is already more than the basic rate.
chargeable gain tax, is it right? Chargeable gain tax, how much? 149,371 times 20%. It comes to how much? 29874. Is it there?
987. Yes.
Hi, Dr. Labib, how are you? How are you doing? Doctor, myself and my colleague, we are three persons, so we decide to start with you, inshallah, Akbar. But after our exam, as you said, 10 of March we'll start, so that's all right for us. But only thing, doctor, is it possible to have classes face to face better than online because they prefer to have class face to face? Please let me know, just inform them.
Is it okay?
Okay.
Next. What they say? See, waste chattels. Chattels are movable, tangible. Okay? Chattels are defined
Yes.
as, this is very important, Yagdan. Very
For
important.
chattels.
Chattels are defined as tangible, movable property. Picture a table. Note that they must be movable. A building is not a chattel, okay?
Because it's not moving.
Ah. Therefore, shares are not chattels. Buildings are not chattels. Shares are not chattels. Okay? See, this will be there for 2 marks. MCQ. Okay, a wasting asset is an asset with predictable life, not exceeding how many years? 15 years. Is it right? Chattels may be wasting or non-wasting as follows. Expected life, not more than, not exceeding. Wasting chattels, not exceeding 15. Non-wasting chattels, more than 50 years. Example, greyhound, boat, plant and machinery, race course, race horse, more than, see, this is where they will catch us. Antiques, jewelries and paintings. Okay?
If we have to, this is memories or because you this is examples, but sometimes they give us another examples we don't know.
No.
How we can know this is 50, more than 50 years if it's not 50
They
years?
will give only this. Understand my point?
Okay.
See, when I am telling you, I am telling with my experience. Okay, I am telling you with my experience. They will only give this. They will not give. Okay? They will only give this. Okay? Greyhound and plant and machinery are deemed to have useful life of less than 50 years and therefore always wasting chattels. But see below. Is it right? See below. What are the exempt disposals? Certain disposals are chapter exempt from capital gain tax. What are wasting chattels? Not wasting chattels. Okay? Now, exception chattel is eligible for capital allowance, plant and machinery used in the business, unless bought and sold for, see the things, unless bought and sold for less than 6,000. Okay, 6,000.
If it's
Exempt.
so, if it's sold,
Yeah.
exempt if
Sold, if it is sold for less than 6,000, it is exempted. If it is sold for the more than 6,000, it is not exempted. Okay? This is very important, very important rule. Okay? Very
Listing
important.
cattles. Wait. Now on the table they said wasting what that mean wasting cattle? So that means
Means life is less than 30 years, 50 years. Is it right?
they call wasting cattle.
Yes.
So wasting cattle is if less than 6,000 is exempted.
Yes.
And non-wasting cattle.
Non-vesting cattle's antiques, jewelry. Okay?
Yeah, but that is what they say also this if less than 6,000.
No, that is not applicable
see.
there.
But I mean the same rule, right?
Uh, Chattels eligible for capital allowance, plant and machinery used in a business
Above.
unless bought and sold for less than 6,000. Non-vestal chattels here. Non-vestal chattels acquired and disposed of for less than 6,000. Is it? Means non-vestal chattels also this rules applies. Less than or equal to 6,000.
Yeah. But we don't consider to it,
Pardon?
right? We not consider this because we consider to wasting cattle.
Non-vesting chattels also.
Okay.
Non-vesting chattels also. See the thing. Now you keep it in mind. A painting was sold. Painting is how, see, painting was sold. Okay? Painting is a non-vestal chattel. Okay?
Yes.
5,600. Original bought how much? It is less than 6,000 or not?
6,000.
See the
Yes.
on what they say. The painting is a non-vestal charge which has bought and sold for less than 6,000. This is exempted.
And they said acquired and disposed.
Fine.
If, for example, if they sold 6,000, but they purchased 3,000. So
No.
It's exempted.
The rule is acquired and disposal of for less than 6,000. If any one condition is exceeding, things will change.
Yeah. So both purchase and sell.
Yes. Sabar. We will come in everything. A piece of land which was bought 2,000 as an investment was sold for how much?
They sold by 2,000.
5,000.
Yes, sold 5,000 and purchase 2,000.
Purchase, acquired and purchased less than 6,000.
Yes.
Land is not movable property, is not a chattel. The disposal is therefore chargeable to capital gain tax. Land, see what they say, land is a chattel?
No.
Is it right? Therefore, building is not a chattel. Okay? Land and buildings is not it is not movable. Is it right?
Yes.
It is not
Yes.
movable. She sold a vintage car, 25,000, and had original cost is how much? 5,500. Acquired and sold. Is it right? Acquired 5,500, but sold for how much?
They sold by 25,000. They sold the 25,000 and the cost is 5,000. So is not is exempted.
Is it? See, what is they say what is the exempted amount? What is the exempted? It is a
Less than 6,000.
movable. Is it right? Where is that?
Is movable, but is not. I think that also the cost is exempted.
That is the reason. It has been given somewhere. It has been given somewhere. Somewhere it has been. It is a movable. Is it right? It is a movable. Greyhound, boat, Blanton Missionary, race course. Okay. She bought a vintage car, 25,000. That has been what they have said. Cars are always exempt assets.
Yeah, I see. I think maybe chapter 18. Yeah. Go to chapter 18. Chapter 18, that is assist, chargeable assets. Go back. Chargeable assets. There is table, there are non-chargeable assets. Cars, machine cars, yeah. Back also. Back. Yes. Cars, the motor vehicles.
Including vintage cars.
Vintage, yes.
Including
Is exempted.
vintage cars. Okay, exempt assets.
So all motor vehicles, cars.
Okay.
What is vintage car? What is vintage car?
Vintage car. You don't know, my dear. It is classic cars, old cars,
Classic.
old cars. You have
Yeah.
old cars.
So like the vintage.
Allah, 1 minute. 1 minute.
Yeah, I got it.
Okay, vintage cars. 1 minute.
This is the classic cars. I have a call. 1 minute. الله حيه. حياك وياك. الحمد لله الأخبار. والله نعم جالس بالمحاضرة. نعم. فرحت سعيدة نقول كنت هناك. كيف؟ هذاك ترى مع مسوس قال لك ماجد ما حد بس انه بس يمزح له معك بس قال لا يلا سوي جرب سوي المقلب طيب اوكي.
I send the picture. See vintage cars.
Can you send it? What's up?
I send the message. See vintage car.
Yeah. I know what you mean. The classic car, the old cars. It's okay. This is valuable.
Yeah. Fine.
Okay.
Next. Point number 4. She bought a mobile crane which is used in her haulage business. She sold the crane less than or equal to 6,000? No.
What is the purchase?
Point number 4. She bought a mobile crane. 12,000.
Crane.
Crane.
Okay. 2,000. So
20,000.
sold it for 10,000.
Sold it for 10,000. Okay. The crane
20 or 2,000?
Huh?
They moved the car for 20 and in August 2000. Which is usually to business. He bought the movable crane for 20,000 in August. What that means is 2,000.
Year 2000, my dear. 2024.
Yeah. Okay.
Allah Kareem.
I thought his amount. Okay, so is so is more than 6,000, and we see that is Wastage or not wastage?
This is a vesting chattel which is eligible for capital allowance. The disposal is
Because it's movable.
therefore is a is not exempt disposal. The crane is a vesting chattel which is eligible for capital allowance. Okay, if it is eligible for capital allowance, the disposal is therefore not an exempt disposal. The loss on disposal, however, is not allowable as it is released for capital allowance. Okay.
Okay.
Next. An antique was sold 10,000. Originally is how much? 8,000. Automatically less than or equal to 6,000. Is it right? The antique weighs is a non-vestal chart. As it bought and sold for more than 6,000, it is chargeable.
Yes.
Next. A race in October 2000, she sold her half share in the race course, 5,000, which is acquired for 4,000. This is, you see the thing, it has been here. Race course is a what? It is a vesting chattel. Is a race horse. Okay, race horse is a vesting chattel. A race horse is a vesting chattel, therefore it is exempt from capital gain tax. Is it clear?
So the share of red shorts.
She has sold off a race course 5,000, acquired, sold it for 5,000, acquired how much? 4,000. Okay, race course is what? Race horse is a vesting chattel. Is it? Race horse is a vesting chattel. If it is less than or equal to
It's
6,000,
there in the table.
huh?
Is wasting chattel?
Yes, it is there now here.
Race horse. Okay. In the table. Okay.
Okay.
Race horse. And but he is not more than, so is exempted.
Yeah, it is both. It is less than or equal to 6,000. Is it clear?